Powell detailed his outlook on the economy and monetary policy yesterday.
Most of my colleagues expect the economy to continue to perform well in the coming year. Many FOMC participants had expected that economic conditions would likely call for about 3 more rate increases in 2019. We have brought that down a bit and now think it is more likely that the economy will grow in a way that will call for 2 interest rate increases over the course of next year.
Joining me right now is the Federated Investors Chief Investment Officer, Stephen Auth. And Stephen, it's good to see you this morning.
Likewise,
so
Maria.
we just heard from Jay Powell, 2 rate increases instead of 3, a solid growth story for 19, 2%, 2.5%, not going to be bullied by the president, not going to allow politics to get in his decision making. It sounded all positive, and yet markets fall out of bed. What was that all about?
The markets are dominated by short-term players, and they feel that the economy is softening. The middle syllable of economy is confidence. And confidence is eroding very quickly. If you look at the underpinnings of the market, the cyclical names, they're down 20, 30, some 50%. So the market is worried that the Fed is going to make a policy mistake. And the only thing that's going to satisfy the market is for Powell to stand up there and say, I'm not going to make a policy mistake. I see that the market cyclical sectors are telling us something, and we're not going to hike unless the things get better.
So markets didn't.
And I think that's actually what he's going to do. I don't think he's going to hike.
So markets didn't believe what he was saying in terms of solid growth story then?
The market is wanting to look forward. And Powell, and it seems like Powell and the wonks at the Federal Reserve are simply looking backward. I think it's better than that.
So you're questioning him too?
I'm not questioning him. I think eventually he's going to get to the right place. My view would be he's not going to hike at all next year. That's our view. And I think he actually will.
So you're not buying the rosy story?
That appears to be the view, actually, a lot of people,
but will he get to that place when it's too late?
Yeah. That's the concern. We have a backup on the Garden State Parkway because someone saw a bird fly by. But as the cars back up, you run the risk of an actual accident. And I think he's flirting with danger here. If I were him, I would have calmed the markets down. Now, I step back and say, what's the downside, upside from here? We don't have the risk of a systemic financial crisis. So even if we do have a recession, it's going to be more of a garden variety, where you get a kind of tapping on the brakes, cut back in inventories, everything rebuilds, and then you go from there. We're not going to have a financial crisis. So I look at the market and say it's almost discounted that. Maybe we've got another 10% downside, even in a worst-case scenario where he doesn't get his act together until mid-year. And I've got 30% upside. So we're still long the market on a 1-year view. On a 3-year view, you've got almost no downside, frankly, off these levels. And very good.
On a 3-year view, no downside in stocks.
Well, you'd have to have a systemic financial crisis to take the system down, and you simply don't have that. Now, everyone got the backdrop of 07, 08, 09, and Maria, I remember being on the show with you years ago during that. That was a very scary time, and that's the backdrop that everyone has.
Yep.
And so they're thinking recession means systemic financial crisis.
Yeah.
And the cyclical stocks, to me, are already trying to discount. I mean, we have a lot of names we like that are down 50% right now.
What do you think the consumer looks like? I mean, is the U.S. consumer as positive an element as it has been?
The consumer, look, consumer spending and in corporate spending, right? They're both driven by, in the corporate spending, it's earnings. Earnings are good. And consumer spending is driven by jobs. Jobs are good. So the underlying basics here look good. But the confidence element is people are observing what's going on in the market and thinking, what does it know that I don't know? And at what point did the CFOs start saying, look, I know earnings are good, but you can't spend the money next week. I'm sorry. I'm holding it back. And you're getting this tapping on of the brakes. I think that's actually happening right now. If you listen to the earnings calls, that's what's going on.
Yeah, I'm just wondering, we've been talking about how he doesn't want to be seen as bending to President Trump's will. Also, you remember when he came into this job, people said he doesn't have the academic economist background some people have. He was, for much of his career, a Wall Street guy. Is part of this, do you think, him saying, I hear a lot of noise from Wall Street, but it's temporary. Fundamental economy looks good.
James, I think what you're highlighting is something I was thinking about last night was 87, which unfortunately I lived through as a very young investor. But my goodness, one of the problems with the 87 crash, the reason you had it, was that you had a new Fed chair who was starting to hike rates, and people weren't sure why he was doing it or what he was doing. And that's one of Powell's current problems right now. No one's been able to observe him long enough to answer your question. I think he's a reasonable individual, and I'm almost certain he's not going to hike next year, given the current situation.
Not at all.
But I think it's highly.
And you said that you think there's a 30% upside for stocks right here?
Oh, yeah.
Over the near term,
on a 12-month view.
12 months.
There's no way now, given the technical damage, Maria, there's no way the market has a big rally in it between now until they get a signed guarantee that we're not doing these rate hikes. So in other words, we're going to need a couple.
They wait a long time for that.
We're going to need a couple of months with pauses. We're going to need the actual trade deal done, probably in, I think the first quarter is going to be turbulent. Because until the market actually sees that this stuff is going on, it's not going to rally. Now, again, I feel like the downside from here is 5–10%. I mean, it doesn't. The cyclical side of the market's already been hammered, and we don't have a systemic financial crisis. The banking system